The next decision we have to make as a business is how to source for finance. The first decision as a business is the kind of ownership we want. The second one is the location. The third one is how to source for fund. Most of the time, business owners do not have sufficient capital to start up the business. Nobody even have the capital anyway. So every now and then there's scarcity. So it means we always need more. Yes or no? So if you have 1 million today, you will think about having 1.5 million tomorrow. So every now and then, every entrepreneur would need more capital. So which simply means whatever we have in terms of cash is not always going to be sufficient. It's not always going to be enough. Therefore, as a business, as an entrepreneur, you have to start thinking about where to get the fund from. Oh, I needed 1 million. I have 800,000. 200 is needed, right? Yes or no? Yes. Good. How do I finance the project? This is a project worth 1 million. I have 800,000. It's not enough. I need 200 to complete, to be able to finance the project. So how do I get this money? When will I be able to pay back this money? These are decisions you have to make. Should I take a short-term finance, a long-term finance, or a medium finance? So, money is needed. We need finance. And that is why finance is what? The disbursement of funds from the surplus unit of the economy to the deficit unit. What do I mean by the surplus unit? Surplus unit means where we have so much cash, where we have so much money. People that have it, but they don't want to use it for anything. You need to consult them. You need to talk to them. You need to request from them so that you can be able to finance your projects. So you need financing. So the kind of finance you need will be determined by if it has to be paid back within now, in 5 years, or after 5 years. Do you get the point I'm making or not?
Yes.
There's a decision we have to make. The first decision is about the kind of business we want to run. The second decision is about the location. The third decision is about finance, the money needed. So, as soon as you figure out that you need this amount of money, what comes to your mind is to finance. And where? Sources of finance. So where do you get this money from? And how are you going to be paying back this money? That is what sources of finance is about. So there are 3 ways we can source for fund. The first one is a short-term fund. We call it a short-term fund because it simply means we have to pay back within a year. Get the point here. A short-term finance is a finance that has to be paid back within a year. Do we understand short-term here?
Yes.
I need 200,000, but this 200,000 that I needed, I have to pay it back within 1 year. That is short-term finance. Do we understand short-term finance here?
Yes.
Great. How do we use short-term finance? And what are the examples of short-term finance? The first example of a short-term finance is a bank overdraft. What is a bank overdraft? A bank overdraft is a credit facility that allows you to withdraw more than what you have in your bank account. So let's say you have $500 in your bank account. You needed $550. This is all you have.
But they give you.
If your bank is able to facilitate this for you, it's a bank overdraft. Do you understand what the bank overdraft is here now? Do you understand what a bank overdraft is?
Yes. What money that you have in your bank?
Yes, a credit facility that allows you, a credit facility that allows you to withdraw more than what you have in your bank accounts. So, write it. Okay, you write it afterwards because I wrote it afterwards. A bank overdraft is a credit facility that allows you to withdraw more than what you have in your bank account. Is it clear?
Yeah.
Then we have a trade credit. What's a trade credit? A trade credit simply means I buy goods now. I buy bottled water. I bought a lot. But I'm not going to pay now. I'm going to pay at a later date. That is what a trade credit is. Do we get a trade credit or not? A trade credit means you buy goods now to pay at a later date. You purchase, you buy things now, but you're not paying now, you pay at a later date. That is trade credit. Do we understand trade credit here? We're talking about short-term finance. A short-term finance has to be paid back within a year. Example of a short-term finance is a bank overdraft. A bank overdraft simply means you withdraw more than what you have in your bank account. The bank facilitates that for you. The second one is a trade credit. A trade credit means you buy now. Trade means buying and selling. Trade means what? Buying and selling. So you bought or you sold on credit means you have sold to get your pay at another day. So you purchase bottle. Let's say you purchase these cleaners, you purchase them, but you are not paying now. You are paying tomorrow, or you are paying after now. That is what a trade credit is about. There's trade, which means buying and selling. Buying and selling involves two people, the business and the customer, yes or no? Yes. We can't talk about trade without a business and customer. This makes a trade, yes or no? This makes a trade, yes or no, please?
Yes.
Great. So when we talk about trade, this is what makes trade. Then we have credit, which means these have sold to these without getting payment presently. So it means B sold to C, but C did not pay B at that time of purchase. I bought now, but I'm not paying now. That is a trade credit. Do we understand the trade credit now? So the trade credit will be paid within a year. It's another example of a short-term finance. Do we get it or not, please? Do we understand or not?
Yes.
Great. And the last one is accrued expenses. What is accrued expenses? Accrued expenses means I continue to purchase things, to purchase more and more and more without paying. I could give you $500 for a purchase. As soon as I spend more than $500, now I'm spending $550. It becomes accrued. I'm supposed to spend $500 with you. I've given you the $500. But now I am buying more than $500. That is what we call accrued expenses. Do you understand accrued expenses here? It's not the same as a trade credit. A trade credit happens immediately. You buy to pay at a later date. Trade credit. Accrued expenses means you continue to spend more than what you have. Do we understand accrued here?
Yes.
Accrued means you spend more than what you have. Trade credit means you buy now to pay later. Bank overdraft means you are able to get more than what you have in your bank account. These three examples are short-term finance. Do we understand short-term finance here? So what do we use them for? We use them to run the day-to-day activities of the business. So businesses, whatever they do today, they use short-term finance to run it. Any question about short-term finance? Good. Then we have the medium-term finance. For medium-term finance, they have to be paid back within 5 years. From year 1 to year 5, you have to pay it back. That's why we call it medium-term finance. Do we understand medium-term finance here? Examples of medium-term finance, or what we can use medium-term finance for, is to purchase an asset, like equipment, machines, motor van. How do we get them? We get them through leasing or hire purchase. What does leasing mean? Leasing means I'm taking this building for the next 5 years. That's leasing. It's not a rent. A rent means you pay monthly. But a lease agreement means there's an agreement between the lessee and the leaser, which means I'm going to use this building for the next 5 years. That's a leasing agreement. Do you understand leasing here? Then for hire purchase means I'm going to buy this equipment, give you certain amount of money, then pay the rest little by little. So let's assume I have a car. I purchase the car. Don't mind my writing, okay? I purchase the car. This is a car. I don't know how to drive, it's fine. This is a car. It is sold for $5,000. I only have $3,000. I paid this. I have $2,000 to pay. Yes or no?
Yeah.
So if I have to pay this little by little. It is called what? Hire purchase. Do you understand hire purchase here? But you have to pay back within 5 years. Any question about that? And the last one, long-term finance. This has to be more than 5 years. You have to pay back after 5 years, maybe 10 years, 20 years, and so on. What do you use this for? You use it to buy building, assets, land. Do we get it? Examples of these are debentures. When we talk about debentures are assets that you use to get a loan. So you have this land, you have this building, and you need money from the bank. So you are using this with reference to the money you're going to take from the bank as a security. That is debenture. Then we have equity capital. For equity capital, it means the amount of money you are able to put into the business. It's a permanent capital. So you could sell shares. You sell shares to people as a public limited company. When you sell those shares, the amount of money you are able to get for giving part of your stake to the people is called equity. I'm going to explain again. There's equity, which means you are able to sell part of what belongs to you for money, in exchange of money. So when you do that, the money that comes to you is a permanent capital. You're not going to give it back to those people that give you the money, but you have lost certain percentage of what you have as a business. It's a long term. I said you get right. And the last one is a grant. A grant comes from probably government, a soft loan. You're not going to pay large amount of interest on it. So these are what we call long-term finance. So when you are thinking about making decisions about financing your project or business, you can think about short-term, which is within a year, medium-term, within 5 years, long-term, more than 5 years. Any question about sources of finance? Thank you.